Hey everybody, I am back. I am back with another dose of economic reality. And yes, I took a couple days off. I did put out a couple uploads though while I was on vacation for you. So for those of you that saw those, I was up in the mountains in California here, north of Riverside County, and did a couple broadcasts from the area up there, but didn't have very good Wi-Fi the whole time, and so I decreased my output, but I'm back. So today's report's likely going to be a bit longer than usual to get caught up on all the news, financial news, economics, etc. And I just wanted to say thank you for joining in here, and hope you had a good holiday, 4th of July holiday. Up there in the mountains, a lot going on, a lot of activity. The 4th of July, pretty busy. There's some lakes up there. And things are packed. I mean, you wouldn't have been able to tell the level of debt that people are in just by looking around and watching people. But not everybody was spending money. There was a few closed shops in a area that I was at up there called Lake Arrowhead, and it was a very nice shopping area around the lake, basically an outdoor plaza, strip mall type of thing. But a few of the businesses were closed. And I was surprised at some of the high-end stores up there. There was one called Pendleton, and they make clothing, and they have like flannel shirts and stuff like that. The flannel shirts were like $120. Store was pretty dead. Didn't see too many people shopping. Actually, not that many people walking around with bags, but a lot of people walking around just enjoying the scenery, especially on the holiday weekend. So very busy up there. Shopping, not so much. But, we see people out there spending money they don't have, which is basically the name of the game when it comes to the economy. If you can borrow money, it doesn't matter. Anything else really doesn't matter. If people can continue to borrow money, the economy is going to look like it's going to boom. Once you cut off the capability of borrowing money, that's when it becomes obvious, just by looking around, that the economy is crashing. Oh. Okay, I'll find out what that was later. But I've called this a slow motion collapse because they're not going to cut off the lending right away. Yes, they're raising interest rates, but what you do is you see more people just borrowing more. Banks really haven't pulled back that much on the criteria to qualify for loans. And that's because we have this system where you can just create money at the click of a mouse. So if someone defaults on their loan, it's not that devastating to the bank. Now, I should say, though, it is devastating to some banks. Banks that can just get bailed out, it's not devastating to them. But banks that are not going to get bailed out, they're going to vanish, get acquired by a bigger bank, or, whatever they decide to do, whatever the regulators decide to do to the bank that fails. But even failed banks, the people at the top don't necessarily feel like they're failures. Look at the CEO for First Republic Bank, one of the failed banks, ended up being a head of a central bank over in Turkey, right? So these people at the top, they have golden parachutes, they have very good salaries to begin with, and a lot of times when their company goes bust, when their bank goes under, they end up going somewhere else in Wall Street or somewhere within the financial sector and end up making a lot of money. For those of you that saw my video 3 weeks ago, we went into pretty good detail about that, about how so many golden parachutes and people out there in the banking industry, especially at the upper level, upper management, CEOs, CFOs, etc., end up doing very well, even though their bank may collapse or fail or get taken over. All right, but anyways, let's talk about the economy, because a lot of people are really shocked and surprised how resilient the economy is. JJ, where's the collapse? I get a lot of messages and emails. Where's the collapse? It's not happening. I thought prices were going to plunge. Well, no. First you have to cut off the banks from loaning out money for that to happen. Remember, 2008, the financial crisis, the onset of that crisis was completely different than it was now. Back then, before the bailouts were implemented, banks were very strict on their lending. They were concerned. They were frightened about the people not paying back their loans. The subprime market blew up. Remember, it started in the mortgage market, and banks at first were very, very concerned, so they pulled back on the lending. At one point, it was very, very difficult to get a mortgage. Credit card lines were being cut. For those of you old enough to remember, what went on back then, things were very tight with credit at first. Will it get that point in this current crisis? We don't know, but banks are tightening up somewhat, but it's not even close to what it was back in 2008. That's why we're not seeing plunging prices. But anytime you double interest rates, and the Fed funds rate went to almost zero, up to over 5% now, you're going to see some reactions in the market, so to speak. So we're going to talk about car prices here next. Car prices are falling. I've got some data here. Let me just go ahead and pull this up here. And a recent article here out of the Detroit Free Press, car owners could discover they owe far more than the car is worth as sky-high prices fade. So that's what happens when you overpay for a car and you buy at the top of a bubble. You are going to be underwater in your loan. Let's jump right to used car prices here. And listen to this. In the first quarter of 2023, the average loan to value ratio on a used car was 125%. So car dealers are still using this supply chain disruption, this shortage, to keep the prices artificially high. Now, how can they do that? Well, if people weren't willing to borrow the money and buy the cars, they simply couldn't do it. They would have to lower their prices. But people are willing to borrow the money, and as we know, the banks are being propped up still, even though a few have been allowed to fail or get taken over and merged with other banks. People are still able to borrow the money for the most part. But now the pool of buyers is drying up because so many people have existing car loans, and many of those people are underwater in their loans. Used car and truck prices are down 4.2% year over year. That was at the end of May. We're still waiting for the June numbers to come out. I think we're going to see another decline though from May to June. We'll have to wait and see, but down 4% year over year. Not a very big drop considering the just the amazing run up in prices. All right, same thing with home prices, right? You might see prices down a few percent here, about 10% here in San Diego, but compared to prices that doubled and tripled in some areas, these drops really that we've seen so far are not very significant. Now, as many of you know that watch this broadcast, I've been waiting to buy a vehicle, and as I've said before, I don't like to buy a brand new vehicle. I like to buy a vehicle that's 1 or 2 years old because that already has depreciated, and I think you get the best bang for your buck to buy something with about between 15 and 30,000 miles. Just my opinion, but I don't like to buy something brand new. I guess if you're a multimillionaire and you just don't care, buy something brand new, and depreciation's not gonna, bother you that much. But even though I have enough money right now to pay cash for a car, I still choose to wait. Even small amounts of money, I don't like wasting money. That's just the way I am. Also, you have to factor in the cash that you use to buy a car. If you want to pay all cash, what could you have done with that cash if you wouldn't have put it all in on whatever you're buying, a home, a car? Could you have invested it? And let's say you're paying 7% on a vehicle loan, but you could have invested it and doubled your money. Then that is a real messed up thing to do, to use all of your investing money to go pay cash for something. Hopefully you still have a lot left over to invest with if you go and pay cash for something. But my point is, if you're paying cash for something just to avoid paying an interest rate of whatever, 5, 6, 7%, but you could have made 50% if you would have invested, then you lost out on a lot of gains or a lot of money that you could have made in the market. Anyway, that's just the way my mind works. I like to think about those things. So I'm still contemplating on maybe getting financed, even though we have the cash. That way we still have cash to invest if the opportunity comes up. Now, right now, there's not a lot of things that I think are going to be good to invest in. I do look for stocks that get beaten down to ultra low levels like Carvana. One more thing on the used car market, though, I'm continuing to wait because we heard the central bank, the head from the central bank out there saying they're talking about at least 2 more rate hikes this year. Are they being honest in their forecast or what they expect? Well, maybe. So I'm going to sit here and hold out and wait for car prices to go down even more. Just what I choose to do here. Now back to the stock thing and the stock market thing that I started diving into a few minutes ago. I sit and wait for buying opportunities in stocks, and right now I don't see anything on the radar today right now. But I've also been on vacation for a while, so I haven't been researching like I do normally. But when it comes to investing right now, I'm just sitting in a money market with most of the cash that I do have invested. I do have some cash out of the system still. And I'm always waiting for, the black swan to jump out, so to speak. We have a lot of instability right now, a lot of risk globally with war, with our systems getting compromised, with the grid going down because of many nations out there that are now hostile to the United States. And the United States, we've been an abuser for many, many decades to so many countries financially with the sanctions that we put on other countries, and how we demand that the world used dollars. And those days are coming to an end. As we know, the BRICS nations now are growing very rapidly, meaning these countries, a lot of these countries are going outside of using the U.S. dollar, either one, using their own currencies to trade, using their own trading system, including precious metals. And I think precious metals is ultimately going to be the backbone of the world currency system. Now that still could be a ways off, but I continue to stack. As most of you know, stacking silver is my favorite item to stack because it's more easily barterable and tradable, and I think it's got a lot more upside than gold right now. But it doesn't mean I don't like gold. Gold is still, I think, a great place to put your money. Many people are moving their retirement accounts to gold and silver. Be careful what you pay for it. You don't want to go with the company that's going to charge you, triple of what you could buy it per ounce, at a bullion dealer or something like that. So do your due diligence with whatever you do, and just be careful out there because there's a lot of people out there looking to take advantage of you. But just my opinion, precious metals, gold, silver are the place to be. Not the only place to be. I think cash is still going to be a valuable asset, especially when we see deflation and falling prices in some areas. And when I say deflation, I do not just mean the money supply, because some people out there think that inflation, deflation are just about the money supply. Sure, those are areas where you can look at inflation and deflation, but inflation and deflation have other meanings, and I talk about the cost of living, referring to inflation and deflation. So right now we're seeing falling prices in cars. Home prices still very sticky, but they are coming down very, very slowly, and a lot of people also didn't expect this. But again, the money has not been cut off like it was in 2008. Banks know that they're going to be either one, rescued, or two, taken over by a larger bank. Or if you're the larger bank, you're going to be rescued no matter what. You're going to be bailed out. So that's why we're still seeing a lot of money going out, a lot of loans being given out. And even people with low credit scores are still getting approved for loans that they really shouldn't be getting approved for. When you just look at the debt-to-income ratios and the prices that people are paying for these items, including cars, it continues to be very, very unnatural, right? But that's what happens when you have unnatural money. When you can create trillions of dollars at the click of a mouse, you see price distortions, right? And right now we're not seeing the banks cut off the lending like we saw back then. So of course the bust, the collapse is not going to be the same as it was back then. All right, let's get into some other news here and more signs that we are in right now a severe economic slowdown. U.S. factory orders decline year over year for the first time since October 2020. So for the first time in almost 3 years, U.S. factory orders decline year over year. So again, where's the boom? I mean, factory orders should be increasing if everybody was so rich. And the reason I say that is because I've got people messaging me, Jeremiah. They say, JJ, everybody's rich. I went out to the restaurant and everybody was buying these expensive meals. Everybody's rich, everybody's got money. No, people have credit, and if you integrate real money into the system, not just integrate, if you go to a real money system where banks would not just loan out money they don't have, where they actually have the money that they loan out, such as precious metals, then you would not see this. You would see the restaurants empty. You would see most stores empty. You would see home prices collapse by 90%. You would see car prices collapse by probably more, but 90% at least, because once you integrate real money, banks cannot just loan out endless amounts of money like they can now. So you're going to see a major crash. So will we go over to that system of money? Well, not right away and not immediately, but I think ultimately down the road, that's where we're headed. So we're going to see much, much lower cost of living down the road. But the question is, how long will it take to get there, and how difficult will it be to survive until we get there, right? Because we still have a lot of tough times ahead of us, I think, before we get to the good times, down the road, where we're going to see honest money. And all you have to do is look at the national debt to see that we're continuing to borrow money at an astonishing pace. So the money printing is happening still, even though they're telling you that it's slowed down and the balance sheet is being reduced. The central bank's selling off some assets, but the debt is still climbing. And how is that possible? Because we have fake money where you can just borrow endless amounts of money because there's no limit on the amount of money that they can create. So therefore, we're still going to see this. Let's take a look at one country in particular that's really, I should say, the people are suffering, not so much the people running the country, but the people, the general population is suffering. Argentina, inflation year over year, 114%. So prices more than doubling in Argentina. And again, we see fake money, fiat money across the globe. And it's going to be a lot of pain and a lot of suffering here, globally, and including here in the United States, before things get finally solved. People think that that's really no big deal. Imagine you have money set aside to buy something. Let's say you have $20,000 set aside. Let's say $30,000 set aside to buy a car, and you're saving up money. Next year you have $35,000. You've saved up another $5,000. But the car you wanted that was $40,000 is now $80,000. So prices have doubled, but you're not saving up money. You're not doubling your savings each year. At least most people aren't. A very small fraction of the population is actually saving that kind of money. So you can see how this type of inflation is very, very dangerous. Now, will it happen here in the United States? Well, some people say it'll never happen because the king dollar is just that, king dollar. So I don't think we're going to see 100% inflation like we've seen in some of these other countries, because we still have the reserve currency, even though that is fading, that is dwindling. It's just not going to vanish that quickly, so I don't think we're going to see this 100% inflation like some other countries that we've seen, Zimbabwe, Venezuela, several other countries that we've talked about here are actually going through that. All right, another piece of news here, recent news I found interesting, is more labor issues, and we're talking about UPS. UPS labor talks stall as union balks over unacceptable offers. So with this high cost of living, high prices, high cost of goods and services, just high cost of living in general, you're always going to have people needing higher wages and demanding bigger raises or higher wages. So you see these talks of strikes, and now we have UPS out there talking about walking off or striking. More than 300,000 UPS workers are closer to striking after the company failed to reach an agreement with the International Brotherhood of Teamsters, threatening to plunge U.S. supply chain into disruption if a deal isn't reached this month. All right, folks, so I want to leave you with this. I've got, let me just say, a source that I'm pretty close to that tells me that the manipulation in precious metals is likely coming to an end very, very soon. We're talking about within a year, and likely before the end of this year. So when I say keep stacking, that's what I'm talking about. Hard assets. There's manipulation happening. Central banks gobbling up tons, and I mean literally tons of gold and silver, while at the same time shorting these naked shorts and suppressing the price on the paper markets, the digital price, suppressing it so they can accumulate it at a lower price on the physical market, right? So that's going to come to an end, though, and these central banks are going to see their holdings double, triple, quadruple in value once the manipulation ends. And a lot of them are the same ones that push the price down so they can buy it cheaper, right? Complete scam, whatever you want to call it, but you can still take advantage of it by knowing what's happening. So that's what's on the horizon, folks. And the reason they're doing that is because they know that this fake money system is in the fourth quarter, so to speak, or in the ninth inning, so to speak. We're at the end, of this fake money system. Still may have some time, though. We need to be careful, be cautious, and keep preparing, keep stacking. So we're going to wrap this one up. Hope everybody's well. Thank you so much for being here. Big love. Bye for now. Keep stacking. Peace.